Hello everyone and welcome back to my channel. In this video we're going to break down a short position that I took on the Nasdaq during Friday's trading. This video is very important because I understand that many ICT traders out there encounter difficulties when transitioning from the learning phase to live trading. Learning might seem relatively straightforward as you gradually absorb one concept at a time. However, live trading demands the application of multiple concepts to come out with an A+ trade idea. So in this video, I will show you how to put different concepts such as the power of 3, daily buys, order blocks, advanced market structure, order flow, and most importantly, time to formulate a highly probable trade idea. So if you are interested in that, then stick till the end of this video and don't forget to hit that like button and subscribe to the channel so you won't miss any upcoming video. And let's get started. And if you guys are searching for a reliable and trusted funding firm, then look no further than Crypto Fund Trader, a special pro firm with immense potentials. Crypto Fund Trader offers a wide variety of asset classes for trading, including crypto with the tightest spreads in the industry. You can also explore seamless trading options with Forex, stocks, indices, and commodities, all at a competitive spreads. Unlike other firms, Crypto Fund Trader believes in giving traders the freedom to succeed on their own terms. Experience challenges with no time limits, allowing you to focus on reaching your goals stress-free. To get funded, all you have to do is to pass phase 1 by achieving 8% profit and phase 2 with just a 4% profit target. You can choose your preferred platform, either the famous MT5 or their own innovative trading platform. Both options provide cutting-edge tools and a user-friendly experience for seamless execution. What sets Crypto Fund Trader apart is its track record of success. Hundreds of funded traders have not only thrived but also received their well-deserved payouts. Don't wait for success to find you. Take the leap with Crypto Fund Trader today. Visit their website to begin your trading journey with this promising pro firm. There is no better time to start than now. Now for this demonstration, we're going to use FX Replay. FX Replay is the best backtesting software in the market right now. Using the coupon code STRANGER, you can have 15% discount and 5 days free trial. So head to their website and use the coupon code STRANGER at checkout. Now let's move on to the analysis. And we are now on the daily chart. So first of all, we need to build the buys. And what do we have here? We can see that we have this fair value gap right here, right? And you can see that it is turning to resistance. So first of all, it was support. So this is the real support and resistance. You can see it offered support right here, and candles started closing below it. So now it turned to resistance right here. Now, after closing below this fair value gap right here, my draw on liquidity is this swing right here. So this is the next draw on liquidity, meaning I am bearish. You can see that I didn't use any kind of complicated PD arrays, no Fibonacci, nothing. Easy. We have fair value gap and we have violated this fair value gap. Now we are likely to go to this sell side liquidity. That's it. That's all you need to do on the daily chart. Now let's move on to the other time frames. On the 4-hour chart, we can see that we are bearish. So price is respecting this up close candle. So you can clearly see that we are on the sell program. We have this fair value gap right here, rejecting price to the downside. This order block right here is also rejecting price to the downside, right? We have also this up close candles right here. So you can see that each up close candle is actually rejecting price to the downside. We have this continuation purge right here. This is not a market structure shift. Some of you will see this as a market structure shift, but this is not. This is a continuation purge. So people who were short right here, right, they will trail their stop loss below each swing form. So their stop losses are here. We have a continuation purge and immediately reject from it, right? So the 4-hour is also bearish. Let's go to the 1-hour time frame. And now moving on to a 1-hour time frame. So we have this break of structure right here, right? And we have this fair value gap. So price. So we have a displacement to the downside and you want to see displacements toward your draw on liquidity. This is a good sign. This is a confirmation sign that we are actually going bearish. So we have this fair value gap right here. Now you want to let price, before taking an entry, a short entry to here, you want to let price retrace to 50% premium. So above the 50% of this leg is called premium, and that's where you want to take shorts. So we want to see retracing to this fair value gap right here, right? We have also this bearish order block. We have also this bearish order block. These two down close candles, so these two up close candles are actually a bearish order block. And now let's start to the 5-minute time frame and let's see how price retraces to this fair value gap right here. So remember, this red rectangle is the fair value gap, the hourly fair value gap, and this line right here is the order block. So price return to that order block, right? And let's refine things out. So let's remove this fair value gap right here, this hourly fair value gap and this hourly order block, and let's refine them on the 5-minute chart. So we have this order block right here on the 5-minute, all right? And we have also this fair value gap right here. So we don't need that hourly fair value gap and then order block, because these are the refinements. And now let's see how price reacts from this order block. Now keep moving, all right? So we have this fair value gap right here. You can see that it clearly gets violated. This is a good sign. We are switching bearish, and we have also this order block right here. This called a change in the state of delivery. Price return to that order block, right? And this is where I took my entry. So after this move right here, our next draw on liquidity is this. Now I know I told you that the draw on liquidity is that daily swing, but that doesn't mean that we're gonna hit it today. We only use that to frame our bearish buys. But this swing right here is a high probability that we're gonna take it today, right? Now I want you to pay close attention to the time right here. So you can see that we are inside a macro. A macro is a short period of time, is a short window where price will seek for liquidity. And the macro we are in is 10:50 all the way to 11:10 a.m. New York time. So pay attention to time. Now what do we have here? We can see that price, after violating this swing right here, so we are now turning bearish, and we have high probability bearish buys, right? We can see that we have this fair value gap right here. You can see that all the time frames are aligned with each other right now. We have the daily is bearish, the 4-hour is bearish, the hourly is bearish, and the 5-minute is also bearish after hitting this video raise right here and shifting market structure right here. So we have this 5-minute fair value gap. And now we are entering a new hour, meaning on the hourly, a new hourly candle is forming. Now I want you to remember, if you guys studied the 2022 mentorship, ICT mentioned the power of 3. What is the power of 3? The power of 3 is something like this. So each down close candles, first of all, we want to see a wick to the upside, right? This is kind of a manipulation, and then expansion to the downside, right? For example, this candle right here, we can see that we have a wick to the upside taking liquidity, and then an expansion lower. We have another one right here, so a wick to the upside. So this wick right here will do only 2 things. It will either seek for liquidity, so take external liquidity right here, right, or retrace to a PDO rate. In our example, the new hourly candle will form after 11, and we are expecting it to be bearish. Now this wick right here, I told you that it can either take liquidity or retrace to a PDO rate. Do we have any liquidity in the form of swings right here? No, we don't. We have a PDO rate. We have this fair value gap right here. So we can expect a retracement to here, right, and then continuing lower. And now let's drop to the 1-minute chart and let's see how that goes. So we have that retracement after 11, right? So this is the manipulation phase of that hourly candle. And then here we have a market structure after retracing to that 5-minute fair value gap. So now we can see that we are actually in the expansion leg of that hourly candle, right? So we have another fair value gap right here. So this could be your entry. And now I want to show you something. I want you to pause the video. What do you see in this piece of price action? Only in this piece of price action, and refer to advanced market structure. So pause the video and guess what is going on in this structure right here. So you can see that we have here a swing, right? And what do we have on the left? Another swing, and on the right, another swing right here. So this is going to be an intermediate term high. Why? Because first of all, it balanced this imbalance right here. So it is automatically an intermediate term high. Plus it has a short-term high to the left of it and a short-term high to the right of it. So this is a protected swing. Price should not go back to take the swing right here. Because I know you have seen before that price would go all the way here to take liquidity and then go to that draw on liquidity. But this is not the case here. After price forming this short-term high right here, this is an indication, this is a confirmation that price will not go to this swing and take it. So this area right here would be your low risk sell, your stop loss above this protected area right here, and you want to target this for at least 2 hours. And let's see. So we have another fair value gap right here, right? Price return to it. And now take a look at this. So I told you that price after forming this swing right here will not go here to take liquidity and then move on. But on here, look at what happened. You can see that price did take that liquidity from here, because you can see that this swing right here doesn't have a short-term low to the left of it. It has only a short-term low to the right of it. So you can see that price took liquidity from here and continued the downside, but here it didn't. And here you go. Price went exactly to the target. So I hope guys you enjoyed this video. If you have any questions, please DM me on my Twitter account or leave a comment down below and I'll answer you as soon as I can. Happy trading and good luck.